Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, January the 6th, 2022. Not much to be adding to our current analysis here for the NASDAQ. The market did drift down on the US Open and created a new low just below 15,599. I think that actually came in at 98.50, 15,598.50. So I am marking that as the completion point for minute wave 3 of minor wave C. And so just a quick review, we have the A, the B, and now we're looking for C wave that ultimately will take out that low at 15,492. Now, what we have on board right now is that it looks like we did complete, yesterday when I left it off, I was leaving it that the market needed to do a slight new low, and that would complete the 3 of 3. So that's the internal third wave, and then rally a little bit, come back down, and put in a new low for the minute third wave. And it did that, and then it rallied. So it didn't come down, put in a new low, and then rally before it actually dropped and then rallied all the way back up. So this gets marked as the wave 3 and a nice start to a minute fourth wave corrective phase, which still carries potential. Now it got up to 15,826, just above that area. Very nice moves actually. And that probably just completed A of 4. We get the B of 4. Now it looks like we probably need to come back up, get ourselves back above that high at 15,896, get a little bit closer to 967. The 50-day moving average sits at 15,967. We have 38.2% resistance, Fibonacci resistance, at 15,967. So it's all kind of waffling around right there as to where likely this small fourth wave will complete, setting the stage for an additional reversal, coming back down in that fifth wave, and that's when we'll look for the move to come down more than likely to 15,311. Now, what I can add to this is that once we can count, and if it gets below 15,492, and we can count 5, so once this is done and we can count 5, then that's all in the good news. That would be that it doesn't have to come down this far or even possibly reach into much lower levels. So if I have to go out one additional, just to kind of put a little bit of tabs on that, we'll go out to the daily chart and see what I can do. I want to put one more layer of extensions on this to give us a little bit more inside that, what I'm calling a black hole. So I'm going to go and change this to extensions. Up here, there we go. Extensions, and then we're going from the all-time high. Come on, no. Drawing tools. So there we go. So we go from our all-time high down to the bottom of wave C, up to the top of wave B. So what we have up, I'm gonna go back down to my hourly chart. What we got in play, well, let's take a look. So again, we have an important level, which is where wave C would be equal to wave A at 15,386. That's right up there being very, very common and likely going to be a most common point for this to stop and to then set the stage for the beginning. So remember, this will be completing an intermediate fourth wave correction. And then the NASDAQ can get started on a intermediate fifth wave advance, which is going to just put the market back into confusion of like, what was all of this? And I guess all the interest rate rises and everything else, okay, we're going to swallow all our pride and we're just going to keep moving forward. That is likely going to be the picture. But on the alternate view, as I have been discussing, if the market really tries or does begin to give up the ghost up at these levels, then we also have to consider moving this back to being the 5 of the 5 of the 5, et cetera, et cetera. And we are just in the first leg down of a much, much larger corrective phase. I'm not going there. I am still keeping an eye out for it because I still believe that the market has intent on rallying. It's just got caught up in this reality check from the Fed minutes being reported yesterday. So that reality check is still kind of in play. And I believe we still have a little bit more, because don't forget that tomorrow now we have an expiration. It's the first expiration of 2022. It's a weekly, and there are a lot of stocks that have come into play. A lot of stocks that got pushed higher in the beginning as if that's the direction that the players were going to take these large tech stocks. Then they got decimated the next day, and then they got decimated again yesterday. So I'm wondering who's going to win, the bulls that came in early or the bears that have kind of taken over since. So we'll have to wait and see. But the potential, if the market truly starts to slide, we can get ourselves down to 15,084, 15,311. So we have 386, then we have 311. Then it breaks and we sort of get a dark little black hole in there without too much in between. And then we drop to 15,084, and then we drop to 14,897. And then the 200, the daily 200 sits at 14,909. That is a very important moving average on the daily chart. And as I have been describing this week, with this weakness, the market has been breaking moving averages left and right. And you can see there, I know there's too many lines, but it broke the 50, it broke the 20, then it broke the 50. And that's what we got yesterday with that slide. Today, consolidation, perfect. Came down, completed the third. Now it's still consolidating, ending up with a slight green bar. Came up and touched that 50, the daily 50, couldn't regain it, but a good try. Tomorrow we may try to regain it. Again, these when they drop, produce weakness. When they are regained and can close above, give a boost, give some strength to the market move. So bear those in mind. So we're still pretty far away from that 200, but it still has a very important part. So for tomorrow, I'm looking for the fourth wave to complete, and then for the beginning of a fifth wave down, all in the context of a C wave, and for it to reach below 15,492. Again, we have that support, 15,386. That's the top candidate to put a stop and a bottom in for this C wave down. Continue to trade smart. Excuse me, continue to trade what's in front of you. The speed at which the market moved this morning was really very clear in terms of we looked for a move up to complete a fourth wave and then a shift down to put in this minute third wave. That's exactly what we got. And it was fast and it was furious, but if we can keep in mind what the count is, it doesn't become a shock and like, what the heck is going on type of a move. If you get caught in that and you're getting kind of like, what is going on, take a quick step back and try to remember what we've discussed in terms of the Elliott count. Those waves came fast and furious this morning, and they completed. The next one started and off we went. And then we got into the sideways action for the balance of the day. All right, I'm going to leave it there. Moving averages on our 1, 2, and 5 minute chart continue to guide trades, continue to guide entry and exits, continue to indicate direction. Keep an eye on them. Elliott and the Fibonacci's continue to help us where we can find resistance and support. The count tells us what should we be expecting in terms of what kind of wave, what direction should it be going in. Those all come together to help form a perfect trading day. So I'm going to leave it there. Our next update will be on Sunday, January the 9th.